Gold jumping more than 1% on Wednesday, breaking above 1,300 for the first time in just about a month. What is gold's ultimate long-term future? Does it have a future? Welcome to Trading Nation. I'm Brian Sullivan. Chad Morganlander of Stifel Nicholas, Craig Johnson of Piper Jaffray are your guests. Craig, I'll start with you in the charts. It's been a battle. We've talked about gold a lot in the last, 9 months or so. Had a great start to the year. It slowed down. What do you see as the medium and longer term outlook for gold?
Well, Brian, let's start with the longer-term outlook on the chart that I provided, because this was a long-term chart. And what we see is when you put this big downtrend resistance line in here off of the highs you'd seen back in 2011, still shows to us that you need to get a close convincingly above $1,400 to reverse that long-term downtrend. Now, short-term, could we see a decent rally up there and retest that level again? Absolutely, we could. But again, the longer-term trend is still down. I would be viewing this and trading this as kind of a short-term trade within the context of this longer-term downtrend. So I'm not a long-term buyer here, Brian, not yet.
Anything in the short term that says, hey, we're going to go up again, or is it really just you're in it for the long term, which is negative?
Yeah, the short term would be viewed from our perspective as just a relief rally that could take you back up toward 1350, 1400-ish range. But again, just more of a shorter term trade from my perspective, and one where you don't want to get sucked into this because the longer term trend is still lower and the best support ultimately comes in around 1050 from my perspective.
And Chad, I know you're a stock guy, not necessarily a commodities guy, so we've talked about this before. But are you willing to buy a little bit of gold here, just as a hedge against anything else?
Yeah, so we manage a global asset allocation portfolio as well. We do have about a 5% position in GLD, gold, in our balanced portfolio. We have a long-term forecasted return of roughly about 4.5%. And we believe that by year end, you could hit roughly about 1350 to 1360 on gold. And then in 2017, get perhaps a 1420 print on GLD. This is a non-correlated asset and should be utilized in an equity portfolio that has fixed income as such. With that said, we're not extreme gold bugs by any measure, but we do believe it should belong in a well-diversified portfolio.
Okay, that's a pretty solid position there, and I would assume that you're going to hold this, Chad, no matter what it does then?
Well, we have been somewhat tactical. I'll tell you that in December, that's when we added the position to GLD. We thought that financial conditions would be tightening a bit later in the later half of this year, and we potentially will get that around December of such. And GLD has actually performed quite well. It's up roughly about 20% year to date. With that said, if we do see it go beyond 1420, we would perhaps pare back some of our position.
All right, Chad and Craig, a good look there at gold. Guys, we do appreciate it. Thank you very much. On any Fed day, we tend to look at gold because it's inflation and interest rate driven. Thank you very much for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.